Welcome and thank you for joining today's conference, the Advanced Child Tax Credit, What Families Need to Know When Making Money Plans. Before we begin, please ensure you have opened the chat panel by using the associated icon located at the bottom of your screen. If you require any technical assistance, please send a chat to the event producer. To submit a written question, select all panelists from the drop-down menu in the chat panel, enter your question in the message box provided, and send. All audio lines have been muted until the Q&A portion of the call. There will be an interactive poll for this session. These will launch on the right side of your screen. Please make sure to click Submit for your responses to be recorded. You may collapse the panel by clicking the polling icon on the top left of your screen. With that, I'll turn the call over to Bob Mulderich, Deputy Assistant Secretary. Please go ahead.
Good afternoon, everybody. Hi, Bob Mulderich from the Office of Public Housing Investments with you. It's really my particular pleasure to be here on this day. And, you know, I was thinking in preparation for my opening comments, our office is Public Housing Investments, and we have 6 offices in that, and most of them are talking about financial investments of one kind or another in the public housing or the voucher programs that we support. But there's one other kind of investment, and that is the investment in people. And we have one whole office, the Community and Supportive Services Office, that its whole function is helping to provide and to put the word out on services that are available either from us or from our federal partners, through HUD, through IRS, as we'll hear today, through Cfpb, helping people understand the services that are available to them, so that we can really make life better for the people that we serve in public housing and voucher-assisted housing. So that's, I think, the best kind of investment. And today, the program that we're here to talk about today, of course, is a particular investment because it's investment in our families through the Advanced Child Tax Credit. This is a great opportunity for us. One of the things, you know, that we have read statistics on is the multiplier effect of every dollar that contributes to our children. And there's at least one school of thought that says it's somewhere between 6 and 12 times the multiplier effect for every dollar contributed to our children. So think of that as if there's a $3,000 tax credit available, that's going to perhaps result in $18,000 to $36,000 worth of societal benefits over the life of that young person. So we are really, really pleased to be here today and talk about the child tax credit because of the fact that it is about to take place. Okay, we're now approaching. We're in the middle of the summer. The tax credit is now alive as of July 15th, and we are so excited to tell you about it today. You know, those of us who work in the HUD-assisted world, of course, know that one of the big touch points for so much of what we do is that income so often affects rent, affects payments that people will make for even in the case of income disregards. The good news about this credit that we're talking about today is it's none of those. It is a pure and simple tax credit. It's a tax credit that includes advanced payments. And so from that standpoint, it is the best of all worlds possible in terms of investment in our families because it's not only a tax credit, but it's money in the pockets of the people we serve right at the outset of the program. So we are so happy to bring you this program today and hope that it's really helpful in helping all the listeners, all the watchers of today's webinar understand better. If you had any questions whatsoever about the way the tax credit works, we hope that those questions will be resolved today. We have a terrific panel for you today. I don't want to take much time because I really want the panel to get to their job. One of the things we were talking about in prep for this just a few minutes ago is making sure that we do the presentations as expeditiously as possible this afternoon so that we can get immediately to your questions because we think that is really the key point of today's presentation. I do want to thank a couple of really important staff and colleagues who are involved in this. And I want to thank in particular our staff from the Community and Supportive Services effort, and in particular also from our Strong Families team led by Sandy Norcom, because those are the people who get the messages on things like this out to all of you. But as I said, we've got a terrific panel. And it's my pleasure to be able to introduce to you the panel and to hand off to the first speaker. We have people here today from both IRS and from the Consumer Financial Protection Board. So first I'm going to be introducing you to Amelia Dalton, who's a senior tax analyst at IRS. Then the microphone will be picked up by David Saminsky, who's a senior policy analyst at the Consumer Financial Protection Bureau, and finally by Denise Devan, who's also a senior program advisor at Cfpb. This is an absolutely stellar panel to be able to present to you today, and we could not do this without their support. So I thank all the people who have contributed to this really excellent opportunity. As I said at the outset, this is an opportunity for us to help our families invest in their own welfare, in their situations, in their children, and we are just so happy to deliver to you today. So with that, I'm going to make sure that I get out of here and let you get on to the business of this very excellent presentation, and I'm happy to hand it off to Amelia Dalton. Amelia, thanks.
Thank you. Can we go to the next slide, and we will have Dave first.
So thanks, Amelia, and thanks, Bob. Just a quick disclaimer that we provide with every presentation we do. First of all, this material, all the material by all the presenters is provided for educational and information purposes only. And second, it does not necessarily express the entirety of that discussion. Obviously, there's going to be a lot of narrative that all of us will be providing in addition to the slides you'll see. And then third, the inclusion, we have included references to some other third parties, and that does not necessarily reflect the Bureau's endorsement of the third party, the views expressed by the third party, or products or services offered by that third party. So with that, I'll pass it back to Amelia.
Thanks, Dave. Next slide. The advanced child tax credit. Let's make more families aware of their eligibility for monthly child tax credit payments. Next slide. Okay, now we have a poll question. Who are you? We want to get a little background information on who's on the call, the type of work you do, so that we can kind of know and address our audience. We know we could potentially have like program managers, caseworkers, resident leaders, or community planners. So if you could take the time now to answer the poll question. Okay, now can we get the results of the poll? Okay, looking at the results of the poll, it looks like most people are program coordinators. That's about 22% that are program coordinators. And then we have about 12% that's caseworkers and also supervisors. Next slide. Okay, now this is our agenda. We're going to discuss the advanced child credit basics, what families need to know, am I eligible, how much will I get, what actions do I need to take, the IRS portals, who, what, where, and when, the top 5 tips, make a money plan, and more resources. Next slide. The advanced child tax credit. The IRS will issue the advanced child tax credit payments on the 15th of each month, beginning July the 15th. Next slide. The advanced child tax credit basis was authorized by Congress and signed by the President in the American Rescue Plan Act of 2021. The child tax credit is one of the country's most needed tax credits. The expansion gives more money to more families with children than the previous child tax credit. The increased credit amount is the highest is children from 0 to 5, which is $300, and ages 6 to 17, which is $250. It increases the age from 16 to 17. No income is needed to qualify, and you have the option to have monthly payments starting July the 15th, 2021. You must either file taxes or register with the IRS to receive the money. And these additional payments is only for tax year 2021 only. Next slide. This next slide talks about the monthly payments amount that you will receive. As I said before, $300 for ages 0 to 5 and $250 for 6 to 17. Next slide. What families need to know? Am I eligible? You must have a qualifying child. You must have a main home in the U.S. for at least half the year. You must be below certain income thresholds, and you must file taxes or provide information to the IRS. Next slide. This next slide talks about the advanced child tax credit payment, that they will not affect any government benefit. So if you have clients that's currently receiving government benefits, they don't have to worry about these payments affecting their government benefits. Next slide. Now let's talk about who is a qualifying child. It's children under the age of 18 years old. They must have a valid Social Security number. It is the taxpayer's son, daughter, stepchild, eligible foster child, brother, sister, half-brother or sister, or a descendant of any of them. For example, it's very common to have grandchildren, nieces, and nephews. They live with the taxpayer for at least half the year, and the exception for that is when you have people that are divorced or separated, or children that were born during the year or died during the year. That is the exception. They can be complained as dependent on the taxpayer's return, and also people with I-10 numbers can also receive the payment. And I-10 is the individual taxpayer identification number. Next slide. What are the specific income thresholds? You will get the full amount if the income is below $150,000 if married filing jointly, and that's also for $150,000 for qualifying widower, $112,500 if you're filing head of household, $75,000 if you're a single filer or married filing separate. You can get reduced amounts if your income is up to $400,000 if married filing jointly, or $200,000 for all other filing statuses. And the very important thing about this is with this year, no income, you can have no income and still receive this full credit amount. Next slide. It talks about the advance payments. They start in July, and they will go from July to December. And actually from July and December, you're receiving half of the amount that you would get actually filed for next year. So you're getting half of the payments this year. Next slide. If you're eligible for the full amount, it'll be $3,600 for children under 5 and under, and $3,000 for children 6 to 17. The amount will be reduced at higher income levels, and IRS will send your money in multiple payments. So as I said before, from July to December, you will receive half the payments. So that is $250 if they're age 6 to 17, and $300 if they're under the age of 6. So half of your credit you receive this year, and then when you file your return next year, you'll get the other half of the credit. You also will have an option on irs.gov where you can actually opt out of receiving the payments if you do not wish to receive the payments this year. Next slide. Now I'll turn it over to Dave to talk about some scenarios.
Thanks, Amelia. I appreciate it. Now I'd like to talk about 4 different family situations and see how the child tax credit would play out for each of those. So first, let's talk about Jamie. Jamie has income of $55,000. Jamie's filing as head of household, is a single parent, and has 3 children over age 6. So for Jamie, the way this would play out is that Jamie would receive a total of $9,000 in child tax credit. That's basically $3,000 for each child, so $9,000 total. And Jamie would receive $4,500 in advance payments, so $750 a month from July through December of 2021, and then would receive the remaining $4,500 when Jamie filed their tax return in 2022. Next slide, please. So now let's talk about Sam and Lee. Sam and Lee have income of $100,000. They're married, filing jointly, and they have 2 children under age 6. And so Sam and Lee would receive $7,200 in total in child tax credit. And the way they would receive it is they would get 6 monthly payments of $600, in other words, $3,600 in advance between July and December of 2021, and then they would receive the balance of $3,600 when they file their tax return in 2022. Next slide, please. So the third scenario we want to talk about is Alex and Casey, and this, as you may recall, Amelia said that for people with incomes above the maximum threshold, they would receive a reduced amount of child tax credit, and that's the case with Alex and Casey. So they have income of $350,000 a year. They're married, filing jointly, and they have 2 children over age 6. Alex and Casey would receive $4,000, and the way they would receive it is $2,000 in 6 monthly payments of $333 each, so $2,000 in advance, and then the remaining $2,000 when they file a 2021 tax return. Next slide, please. And finally, let's talk about Tim and Teresa. They have a different set of circumstances. They have income of $24,000 a year. They did not file taxes in 2019 or 2020 because they're not required to file, and they have 1 child under age 6. And I should say, for folks who don't know, there's a minimum tax filing threshold. So for Tim and Teresa, since they're married filing jointly, they're not required to file taxes unless their income is above $24,800. And in this case, they did not file in 2019 or 2020. You may be aware that some people, even if they're not required to file, do file a tax return because they may have had some income and had withholding taken out, and so they could get that back in the refund, or they may be able to qualify for other tax credits. But in this particular case, Tim and Teresa did not file in 2019 or 2020. Next slide, please. So there's an extra step, and I know Amelia's going to talk about this more in a minute, that Tim and Teresa need to provide their information to the IRS through something called the IRS non-filer sign-up tool. And that's so that the IRS knows what their circumstances are, knows how many children they have, and things like that. And so then the IRS can issue them the child tax credit. So when they do provide that information, they'll be eligible for $3,600, and the way they'll receive it is $1,800 in 6 monthly payments of $300 each between July and December of this year, and then the remaining $1,800 when they file a 2021 tax return. And I should emphasize here that they need to file in 2022 in order to receive their remaining $1,800. And in previous years, they had not filed, but it's important for them to file. It'll be important for them to file next tax season. And the other things, the other circumstance that's going to happen with Tim and Teresa is because they've now provided their information, their family information to the IRS, they'll automatically be enrolled to receive the 3rd round of stimulus checks, which you may recall were issued in March of 2021, and they'll also be enrolled to receive the previous stimulus payments that you may recall were in April of 2020 and December of 2020. So for Tim and Teresa, they're going to receive almost $10,000 in back stimulus payments and be enrolled in the to receive the child tax credit. So it's really going to be a benefit to their cash flow, given that they're very low income. Next slide, please. With that, I'll pass it back to Amelia.
Thanks, Dave. The monthly payments of the child tax credit, as we previously stated, started July the 15th. And so it's important, if you haven't filed a 2020 or 2019 tax return, that you would need to file soon. Next slide. Okay, now let's talk about what families need to do and what they need to know at this time, and it lets them know if they need to take action. So taxpayers need to know that they're required to file taxes, but if they have not done so for 2019 or 2020, they would need to file their 2020 taxes. They're required to file taxes, and if they did not provide the information to the IRS to get the EIP payment, one of the things I want to stress is the child tax credit non-filer tool is the same tool as the EIP payment. So if you've already put the information in for the EIP payment, you don't have to go back and do this again for the child tax credit. It is all the same tool. If you want to update your address, banking, family, or other information with the IRS, or even if you want to opt out of the payments, you can do that on the IRS child tax credit update portal. Most families, the most important thing is most families will need to do nothing. Their payments will just come automatically, so they don't need to do anything. In certain situations, some family might want to look at their individual situations, especially if they're divorced or separated. Next slide. Here again, we're talking about the Irs Eligibility Tool, and it's very helpful. So if you need to go in and update the information, some of your information, you can do that on our website at irs.gov. Next slide. The IRS has two portals to help people submit information to the IRS. We have the Child Tax Credit Non-Filer Sign-Up Tool. As I said before, that's the same as the EIP tool. It's the same thing. And that'll be where you go in to provide information to the IRS. Now, going in and doing this, providing us the information, you want to make sure if you're required to file a tax return that you do not use this non-filer tool. This is only if you're not required to file. The Child Tax Credit Portal, you can use that to update information to us at IRS on our website at irs.gov. It is very important to stress that these two portals are on irs.gov. Do not go to any other websites or pay anyone that says they're going to help you get your child tax credit. That should kind of raise a red flag. Next slide. Here again, we're just re-emphasizing that families are required to file tax returns can register for the child tax credit on their IRS tool on irs.gov. Next slide. Okay, the Child Tax Credit Non-Filer Tool, sign-up tool, is only for families who are not required to file taxes and did not provide information to the IRS to receive their EIP payments. To provide basic information to the IRS to determine eligibility and calculate payment amounts and request any unclaimed EIP money at the same time. So, and it's also important to stress that if you have a prepaid card, you can use that, and you have a routing number, an account number, you can use that and put that in the system to receive your payment. Next slide. So here we're still emphasizing how on irs.gov and our portal, you can go in and update your banking information. We know a lot of times people change banks or for different reasons, they change their debit card or whatever, but you can use our Child Tax Credit Update portal to update your information. Next slide. The Child Tax Credit Update portal is for families who want to update their family address, banking information, or opt out of the monthly payments. You need to have an account with ID.me or as an IRS username to authenticate your identity before you begin. If you have trouble authenticating your identity, call the number the IRS letter will provide to you. To stop monthly payments, you can unenroll at least 3 days before the first Thursday of the next month by 11:59 p.m. Eastern Time. So, and it's also important to stress here in the note we have that you might not be able to update everything at one time. You might have to do one or two things at a time. Next slide. This is very important. This is just another reminder talking about how you can unenroll for monthly payments if you need to unenroll for monthly payments for the child tax credit. Next slide. Okay, the top things you need to know about the advanced child tax credit. You can receive the child tax credit even if you have no earned income in 2019 or 2020. You don't have to typically file your taxes. You need to file your 2020 taxes or register with the IRS to receive your money. You will automatically receive half the credit amount in the monthly payments from July to December and the other half when you file your taxes in 2022. You'll be providing banking information to the IRS to receive your payment, and you may be able to have it added to an existing prepaid card. One of the other things we want to talk about and really stress, we want you to watch out for scams and fraud. Next slide. This is very important that if it seems fishy, it probably is. So we want everyone to be aware of different scams that's out there. Next slide. Now I'll turn it over back to David.
So thanks, Amelia. So just 4 things we want to make sure you're aware of, and this relates to what Amelia was talking about regarding the potential for scams. You can only receive money by either filing a tax return with the IRS or registering on the IRS portals like the non-filers portal that Amelia referred to, exclusively on irs.gov. Any other option is a scam. So if you see any kind of solicitation coming from somebody else, it looks like it may be suspicious, do not provide your information there. The second thing is the IRS will never ask you for your personal information or threaten your benefits by phone call, email, text, or social media. That's not how they communicate with you. If you receive any of those kinds of information, be cautious. Do not provide information through those sources. The third is the IRS won't threaten you with jail or lawsuits or demand tax payments on gift cards. Those kinds of solicitations, those kinds of communications are totally a scam. Don't respond. The IRS is not going to communicate or is not going to threaten you in that way. And finally, if you do receive any unsolicited email, text, or social media attempt that appears to be from the IRS or an organization associated with the IRS, and we've seen one that's like the Department of Treasury Electronic Federal Tax Payment Systems, the IRS would greatly appreciate it if you could notify them at phishing@irs.gov, because they're very interested in tracking down any fraud and scams related to communications by others beyond the IRS. So next slide, please. With that, I'll pass it to my colleague, Denise.
Thank you, Dave. I think this particular slide, let's go to the next slide, please, and I will turn on my video. I want to thank Amelia and Dave, my good colleagues, for all the information, and to our good colleagues throughout the country from HUD. I want to just ask you to think about something for a moment with me, please. And it is this: we are in a moment. We really are. We're in a moment like we've never experienced before. And this moment gives us a chance to do a few things. One is there's absolutely no guarantee at all that this opportunity for the child tax credit, and especially these advance payments, will continue. No guarantee, none. What's really important to think about is what the Assistant Secretary said in the very beginning. When we think about investing in people, it's really important we support people in making the best decisions possible for them and their families at this time in their history, and that we partner together in doing that. And what that means for us in financial capability or in financial empowerment is to really think through the benefits and the risks of a money decision, the rewards and maybe the not such rewards, and to help people do something very important, which is to take advantage of this moment and make a money plan. Each of you saw, you probably knew before you came here today, but many will be surprised at how wide the income thresholds are for this opportunity. So we're thinking of staff throughout the HUD system and all staff that work in this space throughout the country. We think also of all the people we work with and partner with and all the different programs that go on. And what we want to do is we want to think about the short term and the long term. Easier said than done. We have survived and we're still in the middle of a pandemic. Many, not all, have used credit, if they have it, to pay bills that were basic needs. Others had a lot of extra health care costs. You know that as well as I. For many others, there has been the using of any kind of emergency reserve. It was there and it's gone and then some. And so in this moment, we want to think about making a money plan that will do a couple of things, that will tackle the short term and kind of catch up, if possible, and to think about the long term, about having perhaps some kind of a small nest egg, a rainy day fund, an emergency something, or to take care of some shorter term debt that was accumulated during the pandemic. So I want to ask you to really think, making a money plan is about this investment that the Assistant Secretary talked about, Deputy Secretary. Let's go to the next slide, please. So what I want to do is I want to talk with you about one scenario that's a little different than what Dave has done so far. This is a very common scenario, but it doesn't affect everybody everywhere in the country. Living in New York City is very different than Missoula, Montana, or a small town in Mississippi. But I want you to think about this scenario and just use it as a way to help people think about making a money plan. This is a single parent, and this single parent has a 5-year-old getting ready for school for the first time. The parent, of course, works 2 jobs, one only 5 hours a week, the other 30 hours a week, because there is no full-time job available, and especially with the complications of childcare. In this instance, this single parent is going to receive the number you have heard, 3,600. And I want to say something about this. Just because these numbers are here the way they are doesn't always mean, we've learned this from our good colleagues at the IRS, some people, for example, may have had unemployment monies because they lost their job, or their income is very different, and maybe they didn't take taxes out or they didn't claim enough in deductions. So all that's going to get adjusted. But in this situation, this single parent's going to get the full deal, $3,600. $300 a month, as has been said, in July, August, September, October, November, and December, and $1,800 when the taxes are filed for this current year. So the question is, what could we do short term and what could we do long term in this moment? Let's go to the next slide, please. So I want to show you something that's visual. I don't know about you, but I'm a visual person, and we like to show this visually. We're in the month of July. Tomorrow is the 15th. July, August, September, October, November, December. That's it. And then there's a single payment of up to $1,800. And this is for the child age 5. But then after that lump sum payment, 0. So in the planning and in the making a money plan, we want to plan for and not get used to necessarily these payments because they're not going to be there. Let's go to the next slide, please. So then what do we do to think about our short-term needs? This is an example. A couple of credit card payments, very small, are being paid every single month, $20 a month and $25 a month to pay off the costs of those basic needs in the pandemic. There are school clothes, school supplies, even in first grade, a small little field trip. There are other educational expenses. There was no preschool in this scenario. A child needs to kind of get some support. There's after-school care so the parent can go to work and stay at work, and maybe not every day this after-school care. Maybe there's the beginning of a small emergency reserve, and that uses a $300 every month. Let's go to the next slide, please. So what I want us to think about is it's a little hard sometimes to see these charts, but I want to break it down with you. The $300 comes in July, August, September, October, November, and December. On the left-hand side are the monthly expenses we laid out. There's a couple of credit card payments, $25 and $20 a month. Minimum payments, of course, interest, of course. There's school expenses, $50, let's say, each month. There's after-school care, $165, and then there's a rainy day fund or an emergency reserve of $40. Now, I want you to go to the right side with me. Take the $300 each month, subtract the $45 for those payments that are helping this parent to catch up during the pandemic. And then there's $255 left. Take the $50. There's $205 left then to apply to the after-school care. And in a lot of places, this after-school care is not enough. There are a lot of trade-offs. So the $205 minus the after-school care leaves us with $40 left, and that $40 is put into a rainy day. So you can see even in the monthly bills that are paid or expenses or priorities for the money, we're knocking off some of the debt through the pandemic. We're taking care of those child costs, and we're building $40 each month a rainy day fund. Let's go to the next slide, please. Now, the lump sum payment comes of $1,800, and of course, most people already have it spent. No judgment whatsoever. But let's think for a moment in this $1,800. What could we do to both take care of short-term and seed for the long term? Because we know there's a lot coming around the corner. We just don't know what it is yet. So that $1,800 pays off those two credit cards. So that's done, over. $600 and some dollars gets paid off. And then we increase the emergency reserve up to $1,000. And that's a big deal, to have that kind of nest egg that might help people rest for a moment. And it'll all get turned into the costs for basic needs and children and all the things that will go on. And then there's more after-school care. So that lump sum gets used for this longer term and shorter term way of sort of thinking about what do we need in this household now, and then there's nothing. So we have to plan for the today, plan for tomorrow a bit, and then plan for these not to be there at all. Let's go to the next slide, please. Now, here's the $1,800. On the left-hand side, we had two credit card balances, $630. That's all that was left to pay on those two credit cards. On the left-hand side, the rainy day fund, $740 added to the 6 months before. Now we've got $1,000 ready to go when we need it for all the little things that will happen, and that will happen. And then we've got some extra child care after school so that the parent can keep working. So you could take the $1,800 minus $630. Now we've got $1,170 left. Okay, let's take that and build the rest of the rainy day fund. Now we've got $430 left. So we took the $1,170 minus the $740. Now we've got $430. Now we're going to use that $430 for more after-school care. And maybe what's going to happen is because we've got that emergency reserve to be used for emergencies, but maybe there's more after-school care that's needed to lock out the rest of the year. I don't know. But in this example, this is one way that you and I and all of us can work together and seize the moment. Take really good advantage of this moment. Make the best money plans we can with all the risks and rewards, and invest in the learning and the decision-making and the trade-offs that all these families have got, and we know that. And I think at this moment, I'm going to turn this now over to my good colleague, Dave. Dave, we'll go to the next slide, please.
So just to reemphasize thanks, Denise, to reemphasize what we've all been saying is let's make sure that more families are aware of their eligibility for monthly child tax credit payments. And as Amelia had said earlier, many families who are already, the IRS already has their information, they've previously filed returns, or they've entered their information into the non-filing portal last year. They don't need to take any actions. But what we're mostly concerned about is those families that have not provided their information to the IRS or have not updated their information. And those are the folks we're most concerned with, because probably in many cases, those are the folks that most likely need the money more than some other families. So we really are concerned about making sure everybody knows they're eligible and that they provide the information that they need to provide. Next slide, please. So I wanted to share a couple of additional resources with you. So one of the things that Amelia talked about is receiving the child tax credit via direct deposit, which you can do. And if you aren't already receiving your refunds from the IRS via direct deposit, you can go in and update your information at the IRS update portal and provide your banking information. And one thing we suggest is, if for people who do not already have a bank account or credit union account but want to get one so they can receive direct deposit, then the FDIC, one of our sister federal agencies, has a resource that you can go to, and the link is on this page, to find a financial institution where you can open an account. All the financial institutions that are listed on that page have met the basic FDIC account standards, and you can go in, sign up, get an account, and then go to the IRS, get the routing number and account number for the account you've just signed up for, and then go to the IRS update portal and enter that information in so you can receive direct deposit. Next slide, please. And there's a couple other resources here. One is a link. This is a link to a web page that the CFPB has, which literally has a 7-step question and answer process. It's essentially like a roadmap to help you understand what your circumstances is. So it asks what your circumstances are and what you need to do. So it asks basic questions like, do you have a dependent child that's qualified, and things like that. So this is a link to that resource. You can go to our webpage, and it just walks you through the process so you can understand what the next steps are. Next slide, please. And here's a few other resources. And so the first one I'll recommend to you is the IRS also has a child tax credit eligibility assistant. And you don't need to log in or do anything to use this. This is just basically a calculator to help you estimate, to determine whether you're eligible to receive the child tax credit, and to help you estimate how much you may receive. So you can go there, and you can just go in, and it'll help you calculate and give you an estimate of how much you're eligible for. The second resource I'll refer you to is the White House Child Tax Credit page. It's childtaxcredit.gov. And if you remember the scenarios that I talked about, the 4 different family circumstances, you can find them on this page. And there's a lot of other information on the White House's page about the policy related to child tax credit and things like that. The third resource I want to refer you to is the Child Tax Credit and Advanced Child Tax Credit Frequently Asked Questions page at irs.gov. And last time I looked, I think there were over 70 frequently asked questions. It's much more information than we're able to provide to you, in an hour or an hour and a half webinar. And so if you have questions that we haven't answered well, or that we won't be able to answer at the end of this webinar, go to the frequently asked questions page. I think the IRS is constantly updating it so that if they see patterns of questions that had not previously provided answers to, then they update that page regularly. So go there if you have more information, need more information. The other resource I already referred to on the previous slide, which is the FDIC Get Bank page. We encourage you to go there if you need to open an account at a bank or credit union. And then a couple of other non-governmental resources, CITCOutreach.org. And as you can tell, they've been for many years providing information around the earned income tax credit, and they've updated their page with new information about the child tax credit as well. So it has a lot of information, some of which we've already talked about, but other information as well. And then the final resource I'll tell you about is getctc.org. It's a page that's actually offered by an organization called Code for America. Code for America has a lot of tech solutions and also similar information that may be helpful to you in accessing the child tax credit. Next slide, please. And then finally, a couple of other CFPB resources, and here's the links to them. It's a flow chart that helps you understand the additional steps you need to take to receive the child tax credit. And then, Amelia, you saw the top 5 things to remember. This is also available on our page. You can go there if you don't recall what they were and go to that checklist. And then finally, we have additional information on our website about what to do to avoid scams related to the child tax credit and other kinds of scams as well. So all those resources are available to you. You'll receive this slide deck. You'll be able to access them after the webinar. Next slide, please. Now I'm going to pass it back, I believe, to Sandy, who's going to share some HUD basic information.
Hi there. Thanks so much, Dave. I hope everybody can hear me okay. I think that while Jason and Ramel are preparing for our Q&A, and you all are sending in some really thoughtful questions, so we all appreciate that, and this has been an amazing presentation by our IRS and CFPB colleagues, so I really appreciate the opportunity to be working together with you all. Now would be a good time to talk about some of the things participants might be thinking about pertaining to their programs. We realize that people are going to be having concerns about how there affects their program elements, such as rent calculations, earned income disregard, JPEID, and the family self-sufficiency escrow. The child tax credit payments are not considered income for any family, as Amelia had mentioned earlier in the presentation. The same applies to government benefits like SNAP, TANF, and WIC. You can find more information by visiting childtaxcredits.gov. And for that, I will turn it over to Jason for any Q&A or any additional questions that might be coming out. Again, just remember that tax credits are not considered income. There will be no effect on rent calculations, earned income disregard, JPEID, or the family self-sufficiency escrow.
Great. Thanks so much, Sandy, and thanks so much to all of our presenters and to all on the line already. So I'll leave this slide up for just a moment. Oh, there we are. So we'll start off actually by asking all the panelists before we get into the questions that are coming in from the audience. You know, what's one thing that you want folks to take away? And there's a lot of great information that you shared. You know, if you want folks to just have one key takeaway, what is it that you want to make sure that they walk away with today, understanding about this advanced child tax credit? And that's for anyone on the panel.
This is Dave, and I guess aside from all the basic information that we provided on who's eligible and how to receive the credit, I think what Denise has said is so important. And I'm sorry if I'm stealing your thunder, Denise, but making a plan for how to utilize what is new cash flow into your household once you receive the money, how to make a good plan so that it can benefit you, help you be more financially secure. Reduce the financial stress in your lives. I think that's the most important thing that anybody can take away from this is how to make that plan, how to utilize those funds to best increase your financial security.
Great, thanks. Others on the panel?
Yes, this is Amelia. I agree with Dave. I feel like with this advanced child tax credit, it gives families the opportunity to look at their individual situations. And also, as caseworkers and you assisting people, a lot of times they might get off track on what they need to do with the funds. Also, I wanted to mention that on our website, irs.gov, we have a lot of posters, and the posters are in different languages. We have tweets and just drop messages that you can use that's already prepared to help get the word out about the child tax credit.
Thank you so much. And I'll make a plug actually for the IRS Twitter account. That's an account that I never thought I'd be promoting as a great social media account, but it is full of great graphics, including pretty much all the graphics in this presentation. So if you all are thinking about ways to promote the tax credit, I would encourage you to check out the IRS Twitter. They've got a lot of great stuff on there. So we got a lot of kind of technical questions here in the chat. So let me just start maybe with one overarching one. Folks asked about the slides, so we will be providing the slides, which have links to all the resources afterwards, so no worries there. But there's sort of a technical question people have around timing. So, you know, how are folks affected if they had a child this year? There was a question about, you know, what if I'm pregnant now, right? I'm expecting a child. You know, how does all that play into this calculation?
Okay, if people have children this year, they will be able to actually claim the credit on next year's taxes when they file their taxes on next year. Let's say, for example, we're talking about children that were born in 2021. So they could actually get the full amount of the credit on their tax return next year.
Gotcha. So the December 31st, New Year's Eve, 11:59, they get the full credit for this year. January 1st at midnight, they'll miss out.
That's correct.
That's good.
Well, I'll leave that between everyone and their doctors to figure out how to handle that. But all right, we got some good questions here about why would families unenroll from monthly payments? So there was a slide up saying how folks could unenroll. It sounds like a great benefit. Why would anyone want to not receive it?
This is Amelia. Sometimes, let's say if you have divorced and separated families, a lot of times in a divorce situation, they may alternate every year, every other year in claiming the children. For example, let's say the husband might claim the kids this year for their 2020 taxes, and they start receiving the advance payments this year, and then next year, let's say it's the wife's opportunity to claim the children, the husband would actually have to repay the advance payment that he received this year, because when the wife files the return for next year, she's going to get the full payment for the children. So that's why we talk about people looking at their individual situations and determining what's best for them. We know in divorce situations, also we know people swap children. It's all kind of things that goes on, and people need to be aware of that because all of that will be validated. We do actually reconcile that when the taxes are filed.
Great. So let me just make sure I understand that. One is that, just to go back to the first question, we had clarification in the chat. So 2021, you have a kid, you're A-OK for this benefit, but of course, you won't really be able to claim it until your taxes next year if it's December 31st. So it depends on the timing of when the child is born. And then the second question, which we had a lot of questions about this in the chat, really gets down to who has custody. And so if two people both claim the credit for the same child, if I hear you right, that means that someone's going to have to pay that back.
That is correct. Because what happens is, for example, the payments they're starting to get this year from July to December, those are advances for next year's taxes. So, for example, if they have split custody and they alternate years, when the person that files for next year, like in my example will be the wife, she will actually get the credit for the whole year for the child.
Great. So I think that the key takeaway I'm hearing is folks really need to work out, with their partner or, with whoever has joint custody of a child to make sure that they coordinate around who's claiming this credit. That's correct.
I suppose, this is Dave, I suppose there's another scenario, and Amelia checked me on this, but it could be an example where somebody had a significant change in income, say from 2020 to 2021, and, all to the good. Maybe they got a significant increase in income, so they may not be eligible, say, for the full amount that they might have been in a previous year. And so they may want to unenroll from receiving the monthly advances now and then just reconcile how much they're due when they file their taxes in 2022. Does that sound right, Amelia?
Yes, that's correct.
Yep, that's a great point. We actually had a few questions in the chat actually about like windfalls, right? So if somebody had a sudden windfall of income this year, what should they do? And so it sounds like to me, number one is they should probably talk to a tax professional or an advisor, but also that they should consider looking at this tool in case they might want to opt out of this credit. So one big question here, what is the likelihood that a family would owe the IRS, I guess in terms of penalties or fees if they receive the credit and don't opt out?
As I mentioned, for tax year 2021, the credit would actually be reconciled on the tax return. So, for example, it will calculate the amount of the credit that you should receive. Then it will also subtract out any advance payments you received, let's say July through December, and then that would be the amount of the credit that you received. But we also have something, and we have more information about it on irs.gov. We have the repayment protection. And what that actually is where, let's say, if you get too much of the credit, you're actually protected and you don't have to pay it back. So that's up to $2,000 per qualifying child, but that's only based on, and I want to really stress, if the overpayment is due to the number of qualifying children. So I know I've seen some advertisement out there where people are saying, oh, you're protected if you get an overpayment. You can't make that blanket statement. It depends on the situation of the overpayment.
Great. And there's actually a follow-up on that point. Is there a limit to the number of children that can be claimed for this credit? We're thinking about, I guess, the cheaper by the dozen scenario. So, how many kids can folks have and get this credit?
There's no limit for the number of children. There's not a limit.
So I think a finer point on that, Jason, is I think people are thinking, like, for example, with the earned income tax credit, it's, one child, two child, and then three children or more is when you get the maximum amount. Whereas with the child tax credit, if you have 5 children, they're each eligible, based on all the standards we've talked about, to receive the child tax credit.
Great. So it sounds like, folks may be confusing this or conflating it with the earned income tax credit, but for the purpose of the advanced child tax credit, the more the merrier. Great. Question about aging out of this credit. So let's say you have a child turning 18 or at some point in 2021. How does that affect their eligibility for the credit?
They won't qualify because they've turned 18.
Okay, so if they turn, just like, I guess, in terms of when you're born, if you turn 18 during calendar year 21, that means you're not eligible for the benefit for this year. That's correct.
Yeah, I think you said earlier, Jason, that the end date is basically December 31st, 11/59, et cetera. So if you're 17, you don't turn 18 until January 1st of 2022, then you're eligible. If you're turn 18 on December 31st of 2021, you're not.
So I guess that's the flip side, right? You might get the benefit for an extra year even if you weren't eligible for this year, but everyone gets the same number of years of eligibility. There's a really interesting question here, and I'm curious what you all have to say on this. Is there information for heads of households who are not U.S. citizens or have eligible immigration status? So is any part of this determined based on status, or is it just based on whether you actually file for taxes?
So, Amelia, should I take a shot at that?
Yeah, I missed half the question, so go ahead.
So I think a question that we commonly get is in a mixed status household. Say, for example, the parents have individual tax identification numbers, but the children have Social Security numbers. So in that circumstance, those children, if they otherwise meet all the other eligibility standards, can be claimed for getting the child tax credit. That's not true, say, for example, for the EITC, where the parents would have to have Social Security numbers as well. But in a mixed status household, if the children have Social Security numbers, even if the parents do not, they're still eligible to receive the credit.
Right. So it's really about it sounds like it's about the children, and then,
correct.
Right. Status of the children. Okay. Well, let me introduce my colleague at this time, Ramel Calderwood from the Office of Field Policy and Management. He's been working with Sandy and I and the whole team here on producing this, and will help with some Q&A questions. Ramel, are you on the line?
Thank you so much, Jason. So the next question that we have is on this one. So the folks have missed the deadline and sign up after, like the first payment, then can they retroactively receive them for the past month?
So I think you're coming in a little soft, Ramel. We're having some trouble hearing you, but go ahead. Well, let me see. I think if I have the question. I think it might, if I heard it right, it's around when the payments start. So let's say, I don't go into the portal in July, and I only get in there in August. Will I get a back payment for July, or will I just receive that payment as part of my refund for next year?
Could you guys?
Amelia, did you hear that?
I think you'll receive the payment, the payments as part of your refund for next year. So let's say, if I understood it correctly, you said, for example, if they started getting payments, let's say in September through the end of the year, and they would get those the additional payments on their tax return next year.
Okay. So basically, it's important, I guess, for folks to get in there now if they don't want to have to wait until next, March or April to get the balance of the payments.
Yeah.
Jason,
So
there's another thought here. Let me offer this. Amelia and Dave, can you guys speak again to the opt-in, opt-out part of this? Because I heard the question, too. What if somebody doesn't get a July payment, would they get it in August? That's how I heard it, but I may be wrong. Could you guys speak to the opt-in, opt-out part of the portal again?
Okay, this is Amelia. So, for example, if you had children on your tax return for this year, and you've already filed your tax return, and you started getting the payments in July, and you're receiving the payments, and let's say, for example, we've had some people already contact us, IRS, saying, well, I just like getting my money in the lump sum. They can opt out. So when they opt out, they're not just opting out saying they don't want the payments at all. They're just going to wait till they file their tax return next year and get the lump sum payment. So you can opt in and opt out for different reasons.
Great.
And another variation on that, talking about people who still need to provide information through the non-filers portal. So these are the people like the Tim and Teresa in that example I cited that did not normally file a tax return. If they did that today, obviously it would be too late for them to receive the July payment. So the first payment they could possibly